here because our noon keynote, we want to make sure we hit that on time. Sheila Bair, I'm happy to say, is in the house, and can't wait to come out and speak with all of you. So we're just going to keep this moving. Now, our next panel, it's we're looking at career tracks. This is career on-ramps and off-ramps. And what we want to discuss right now in a very conversational way is, and it has nothing to do with the fact that slides were an issue for the last panel. But can I tell you, all of us are really happy that none of us have slides right now. Yes. So we want to talk about how women, particularly, can maximize their earning opportunity, because that is how wealth is built for women. We've heard from Sandy how it is not coming from owning property, and it is not coming from owning a large corporation. It's coming from what we earn. And so it's more important than ever, especially when we heard some of the dire forecasts, to make sure we're earning as much as we can while having the life we want to have. And that's a very difficult balance, I think, for everyone, men and women, to be able to achieve that. So I want to first introduce our panelists. May DeVincentis is with us. May has had a very illustrious career in the very female-centric Department of Defense.
All about women there.
And also with us, Pat Pettinato. She's head of human resources for SAP Americas. And I want to say we were expecting Marcia Jones from PNC to join us. Marcia, I believe at this minute, is still stuck on a tarmac in Pittsburgh. So we will not be seeing her for this panel today, so Marcia will definitely be missed, and she sends her regards, but we've all been there, and that's no fun. Hopefully it's not a multi-hour situation for her on the tarmac, but she's not going to be able to make it for this panel. So I want to get started and really talk about what this idea of career on-ramps, off-ramps means to you. And in some ways I look at it as, is it the linear career track? You get out of college, you get the first job, and then at some point you retire. That's the linear career track. Non-linear, May, a little different. Tell me what your definition is.
So Mary, I do believe that there's a lot of definitions out there. So I did a wee bit of research, and I was proven to be correct. So some people define nonlinear as the capability to take long periods of time off from work, to maybe stay home and raise children, or to take care of an elderly parent, or maybe to pursue a small business opportunity that's not in your career field. So, for me, I think that today we're talking about people that are serious about a career, using that term in quotes as well, but serious about a lifelong commitment to earning and to being successful to some degree. And not everybody wants to be the CEO, but I think most people do seek to be successful. And so to me, this notion of nonlinear is more about the benefits of moving around an organization or a series of organizations in a more horizontal fashion. And so I'm sure that Pat can expand on this a bit, but in my experience coming up through DOD, if you started out your career in the contracting area, you sort of stayed in that contracting area. And if you were good at it, you moved up in that. And if you weren't good at it, you sort of, you sat in the corner and you colored. But, you didn't break out and suddenly go over to work in the comptroller shop, especially not mid-career. And really in the 90s, we started experimenting with trying to move some of the really brightest stars around. And it was this, earth-shattering event that the HR people really did not like. But they turned out to be the people that we did move around, and I was one of the people that sort of self-moved around, but they tended to be the people that did become successful because they broadened their perspective, they got this wealth of experience, and they were able to see things through the eyes of another organizational entity. And so you've all been in those meetings where the person from finance is talking and everyone is snickering and, just, not on board with what that individual is saying because no one's ever, sort of walked the mile in that person's shoes. So, moving around an organization in a more horizontal fashion, to me, helps to define the nonlinear career path a little bit more succinctly for today's purposes, but also add some goodness to that notion of it's no longer you come in, you think you might like HR, and you get put in the HR track and you can never break free again.
Pat?
Can I elaborate? Yeah. So I didn't do any research because I wasn't planning to be on the panel, but this is a subject that is very near and dear to me, and because I'm in HR, of course this is a topic that we pay a lot of attention to. So let me just share two perspectives on it. One is that when you look at a company like mine, it's a big multinational, privately owned or publicly owned company. We have, 65,000 employees. We have 5 career levels and an executive level. And when you get to the executive level, there's about 600 people sitting in those jobs. So when you do the math, there's only so many moves you can make up the career ladder. And if you're going to be working in the workforce for 40-some years, that's not a lot of movement. So really, in order to benefit growth and change and all the things we heard everyone say today, put yourself out there, step out of your comfort zone, take some risks. Those are the things that really truly stretch you and make you grow and help you realize your potential in ways you could never imagine possible if you didn't take those risks. And in order to do that, you need to work across the organization. You need to take some steps sideways and step into jobs or functions, or sometimes it's not even a job. It's just taking on a role or a project or something that wasn't there yesterday, but it's something new. It gives you a chance to have some, build a new network, make new acquaintances, learn from people that you wouldn't normally be exposed to, and just take it all in. It's really a really fabulous way to build your own capabilities out and, at the end of it, become more valuable, both from a knowledge and an experience standpoint, but then you've built your capital to negotiate for more earnings and to, you've added more value, and in turn you expect more from the company. And oftentimes those are the folks that tend to be recognized and get more, and I can tell you that, firsthand. From an HR perspective, it really is. And just one other point on it is, I came up through management probably before many of you, but I started out early in the 90s, and I remember, I guess now I look back and I was a trendsetter. I didn't think of it at the time, but when I first had a life change, a child, and my boss asked me to come back to work after 6 months, I negotiated a schedule that wasn't a schedule. I negotiated a work-at-home schedule for part of the week. Nobody heard of that back then. And then when I came back, I had a secretary who had a baby and didn't want to come back full-time, so I created a job-sharing environment for her. Nobody had heard of that at this company either at the time, 2 people sharing one job. And so lots of things like that started to come about by people just thinking outside the box a little bit back then, and a lot of those things continued to happen in my life because I made them happen, and they would never have happened had I not asked for them. So I think someone said that earlier today too. It's thinking a bit creatively. Don't always follow the rules or stay in the box. But maybe there's not a job that you want, but there's something that gets you excited. So offer your services to somebody or suggest a different way of approaching work. And things just generally become different. Linear maybe is not the word that captures all of it, but it gives you things. It makes you more. Sometimes it revitalizes you. Sometimes it keeps you sane, and sometimes it just makes you more valuable.
And I want to say a special thanks to Pat, because my mother raised 9 kids, and she taught me to never hesitate to ask for help when you need it. So when I heard Marcia was stuck on the tarmac, and I knew Pat's background, I cornered her in the back and asked her to help and pitch in. And she was incredibly gracious to say, yes, I'll do it, which everybody at SAP has been with this conference, so we're really grateful. Thank you for that. I have a lot of questions, but I want to start by sharing something, my own experience. And it touches on what you're both saying. I've had a career which most people would say it's pretty linear. I've worked in television my entire career. Pretty linear, right? Started, stayed in it, still in it all these years later. The reality for me, though, how I'm able to stay in the business, it's a very competitive business, and with women, they love to eat you up and spit you out after a few years. And so how I've been able to stay in it is by constantly changing careers within my career, based on what I wanted to do, and based where what was happening in my life and my values, and really where my competencies were. I'd love to say that I knew exactly what I wanted to do when I took my first job. I think there are some people who have a real strong sense of, I want to be the president of the Cleveland Fed when they're born. I didn't have that. I'm not sure Sandy had it either, but I think that, that you don't, some folks in the audience right now, knew at 4 or 5 years old what you wanted to do, and you're doing it. That wasn't me so much. But through my career, what I wanted to do always became obvious. So what I would do is set back and say, how do I get there from where I am today? I made a big leap at the age of 36 from being an executive producer and running a newsroom to going on air and being a host, a reporter, an anchor. And let me tell you something that probably doesn't seem like a big deal to anybody here. But at 36, all women in TV are generally washed up unless you're already a superstar. Your career's over at 36. It's not beginning. I wanted to do it. And so what I did is took advantage of the situation I was in and did as much learning on the job as I could while I was still doing my job, to get the training, to get the interviewing skills, which I had already had from doing a lot of the producing, then getting the on-air training I needed. So making that leap was really important to me. It became a goal, and I used the tools around me to be able to do it. A few years later, just as the agents in New York were knocking and saying, we have a job for you, come to New York, and at the time I was in Philadelphia, I had my daughter, which was great. She had some medical issues. So moving to New York was not an option for us. Her hospital was Children's Hospital in Philadelphia, and it was just one of those situations where for my family, I needed to stay where I was. I needed to stay either in the job or at least in the location I was for whatever period of time, as long as it was necessary. So my career had to take a different track. At that point, I rethought, how can I do what I'm doing and take care of my family? It meant scaling it back. It meant not going to the big city with bright lights and jumping into that competitive arena. It meant staying in a good job where I was, doing what I could do, and not taking on a whole lot of extra things, to be honest with you, but doing a good job and keeping my skills sharp. And I'm happy to say, full circle, my daughter's now 8 years old. This year I took a job in New York, and I helped launch a brand new network, Al Jazeera America, probably the most difficult job I've had in my life. I was at a point where I could do it, but a whole career change again. Now I'm in management. And I'm leading 300 or 400 people. It's a very different job than what I had. But each time throughout these processes for me, I was constantly gaining learning wherever I could. Exactly what you were suggesting. Across departments, I was curious. How do you do your job? How does it work? Let me volunteer. A lot of nonprofit work. If I could do something to help out a nonprofit and learn a few skills along the way, I would do it. And constantly reinvesting in my own personal education. So those were the issues that were important to me, and I have to tell you, it really helped me throughout my career. I've been able to stay employed, doing the work I want to do, but not always at the fever pitch that I had been doing it. I had to pull back a few times. And I'm happy to say that it's possible. There'll be times in all of our lives where something else is going to be more important. And you're able to do it. But from an HR perspective, from a career management perspective, when someone has to pull back, do you recommend leaving
the workforce? Can you re-enter? Is there an on-ramp back in?
So probably every one of us could answer that from our own personal perspective, right? I believe where there's a will, there's a way, always. And it depends on circumstances a lot of times. I mean, if, like, we work with people worldwide. So in Germany, I'll give you an example there, women generally, not men, but women generally will drop out of the workforce for at least 2 years or longer. And when they return part-time. And then they work another year or two part-time before they return full-time. That's a long haul. We're in the software industry. You miss a lot in that window. And most of the time when they go away, they completely disconnect. So in that situation, that would be a very difficult reentry, and I've seen a lot of people struggle. More choose not to come back after a long haul like that than they do come back and jump right back in. But in our country here, and in many other thriving countries, when you're not out of the workforce terribly long, for whether it's child-related reasons or other family-related reasons, it's not hard to get back in, but it's up to you to make sure you don't drop out completely. So, and that's what we advise everybody. I mean, you have to stay connected. You don't have to work actively, but you need to stay connected. You find ways to stay plugged in. You attend some things that happen. You keep your network strong. You interact with people. You read the portals or the newsletters or the pages that are published. You just don't lose and you continue to stay on top of the industry that you're in, what's going on in the industry, so that when you are ready, you're not a distant thought. You're vital still, and you have to take responsibility for that. I think there's times when you do need to drop out and take care of your family. I mean, sometimes so many things come at you at once that you only have energy for your personal life and the needs of your personal life, and then that just becomes your priority, and then you figure it out when the time comes to re-enter again. But I think my advice to anybody that's going to take a temporary pause for personal reasons is don't drop out altogether. It's not going to help you at all down the road. That help? Yeah.
I would add to that you have to really know yourself as well. And so you have to accept that if you're going to have a career, have a family, do nonprofit work, do some other thing that's your passion, you can't have it all. For years, women talked about, yes, you can have it all. No, you can't. Well, you can if you want to maybe go to an insane asylum at the end, or have a heart attack. And I've watched people just really make themselves ill trying to have it all. But you have to be honest with yourself. You can't have a fast-track career that's competing with something else that you think is very, very important, like a child. And so you have to face that fact head on. And you do have to accept it and understand that as you unplug, even if it's not a complete unplug. But my favorite example is, the government has finally embraced remote workers. And so we have a lot of people that now, are able to work remotely. And you can really, I call it the fuzzy bunny slipper syndrome. That can get too comfortable. And you can reach the point where you just never want to go in to the office and see those people. And if you're serious about returning to be one of them someday, you've got to force yourself out of that comfort zone, and you have to be very visible in a virtual sense. You've got to be on those calls. And even if it is the most boring call and you really have nothing to contribute, you've got to say something. You've got to be there. You've got to show up once in a while in a suit and participate. You've got to go to the conferences occasionally. You've got to find someone. If you have a significant other, it's got to be made clear that occasionally you will take on these responsibilities at home so that I can go be a grown-up for a while. And so I think that you do have to maintain the connection, but you have to be honest with yourself that that person that you were competing with is probably going to get ahead of you, and you're just going to have to accept it. Because if that person has not made the same life choices that you've made, and they're going to be there, 10 hours a day, killing themselves, taking all the ugly travel and doing all the ugly jobs, and you're working remotely and you're working hard. I'm not trying to put that down, but there is a benefit to being present, and it's I'm talking about people who want to work remotely 5 days a week, not people that work from home 1 day a week. That's not what I'm talking about. I'm talking about people that really believe they can stay home and work part-time and take care of the kids and watch mom and do all of that. The person that you were competing with the day you left will be in a higher position more than likely when you return. So there's just, a level of honesty I think you've got to arrive at with yourself as you make these life choices. And some people are just not cut out for ever disengaging. They're usually the people that have trouble balancing things. But most people do recognize it at points along the road. I need to step back a little bit, but you do have to be honest with yourself, I think. And so I think you just have to go into it eyes wide open.
And isn't it a little bit, when you look at that for the short term, maybe that person you're competing with, okay, in a 2 to 3 year period, they're ahead of you. But when you're looking at a career over the long haul, and you have brought some sense of balance to your life, ultimately, aren't you the winner? Because it really is, where are you from that trajectory standpoint? And your trajectory goes much further out when you have that balance, as opposed to keeling over too early, or just needing to drop out later because you're burnt out, or really just not performing at a great level because you're burned out. So while it may be a temporary setback, I think for the long haul, it's the better call.
Yeah.
From a personal perspective, it may be, but I do think that a lot of people don't think it through. They're thinking about what's happening to me today, this week, this month. They're not thinking about what is the scenario 3 years later when I return. And I've had people come to me in tears. I didn't know it would be this way. Well, even then you didn't think about it. But my advice isn't to not do it. My advice is to think through it so that you're not disappointed, you're not surprised, you're not taken aback, you're not somehow bitter, because it will be different. You will be, and it will take you some time to regain that position that you had. I've watched people regain and surpass other people, absolutely, after they've had a break in their work experience. But I've also been there when people haven't really realized how difficult it was going to be to re-enter and what they would be faced with. So you do have to think about it.
And it sounds like the ramifications, if you're not thinking about the ramifications on the front end, you're not doing what you need to be doing in that, let's call it a break, even if it's just you're still there but you're not working at the same level. If you're not conscious of that during that break period, you're not doing the things you need to be doing to reemerge more successfully. Am I getting that right? Yeah.
Yep.
I just want to go back to also rethink the break completely. I mean, you don't need to always have everything in a box. I mean, that's what men do, right? They put everything in a box. And I'm just kidding. I mean, that's what we are told that you do. But we know that you
The
don't.
men wince in the audience, right?
We're really good at multitasking. I mean, we are, and we're capable of doing many things well at the same time. So I would suggest not to do it that way, not to go out of work and then re-enter, make the hard re-entry later. I'll just tell you another short story about my experience. It was not as dramatic as yours, but it was life-changing. So another point in my life, I was getting divorced and I still had a young child. So I was a manager who had to travel all the time for work, and I knew that wasn't going to work. So, but I loved my company and I didn't want to leave. So I happened to have an opening on my staff. So I asked my boss if I could replace myself as the manager and take the position on my staff as an individual contributor. And it worked out. And it was one of the best things that I ever did, because I got to hire my replacement and I found someone I really wanted to work for. And then I took that other job, which didn't require me to travel. But in the process, I also negotiated the fact that I wanted to stay on the leadership team, even though I wasn't a manager anymore, which again was not common at the time, but I got that. So because they knew I could contribute because I was a manager. So I stayed connected to the management team, and I, did this job for several years until things balanced back out for me in my personal life. And then she moved into another job. I took that job back and another function and made an even bigger job out of it for myself. So, and I moved back into the fast lane when I was ready, when I could do it and manage everything again. So I just think my suggestion is just be creative. Always be creative in finding a solution that works for you, whether there's an obvious one or not.
One of the things I've never done is talk too much at work about when things were difficult. If I had child care issues, no one ever heard about it at work. The funny thing is, I will say, in my new position, in the last month, I have had 3 men come up to me and say they're having problems with their schedule because of child care issues. Which I'm kind of welcome to hear that, actually. It means that something good's happening at home, right? That they have that responsibility. But how much should we share? How much is making our situation understandable to our boss? How much is actually tainting our potential by saying we've got problems at home? How much should we talk about at work?
Yeah. So I think in a work environment, I mean, we work a lot of hours a day. Most of us don't work a 9-to-5 job, at least in the industry I'm in. So you can't separate life and work. I mean, it's all intertwined. So I think for we tell our leaders, and I believe this strongly, that you need to know the person. You need to know what's going on in their life in order to inspire them and lead them and be effective at trying to get them to do their best. So you need to know all of that. Now, you also don't want a group of people coming in and dumping their problems on you either. It's not the company's problem, it's your problem. But for people to share their lives and to share their situations and to support one another, I think that's all very healthy. I think people need to understand sometimes things aren't going to be solved at work, but to have some camaraderie around it. There's a lot of commiseration. Everyone's experiencing things, probably a lot of things at the same time. So, as long as they're sharing it, and I'm actually seeing a big shift in the workforce today. I mean, a lot of men carry a lot of the burden at home today, tons of it. Many, many, many women in my organization are the single breadwinners, and the men, their spouses are staying home, taking care of the home and the family. So that's a shift also today. So, and a lot of men tend to take a lot more responsibility with the after-school stuff, the coaching and the games and the running around and all of those things too. So men are asking, or just making it work, getting out early and, taking part in those things during daytime hours. So we just have to, not let it interfere, but be open to people bringing their lives into the 9-to-5 world. It's not really bringing their personal lives into work. I don't look at it that way. I look at it as just balancing work and life, during the hours that we have to contribute, whether it's day or night or weekends. I mean, a lot of us work schedules that aren't, Monday through Friday too. So it's a balancing act. It's what it is. And it's okay to talk about it, I think, and get help with it.
I think that this audience is probably in a situation where they're working in organizations much like those where I've worked and Pat has worked, which I would say are, maybe a little more sophisticated, to use a kind term. But I think you have to be aware of who you're dealing with as well. And so I think that there's many people who work for smaller businesses or for people who are a little more in the Neanderthal category where, you do have to choose what you tell them. Certainly I think you do at some point have to let people know when you're having a significant problem at home, but I do think that some smaller businesses where you don't have the protections of, a broad-minded HR director or, a really wonderful manager who's been through a lot of training and has been sort of exposed to the fact that, people have lives, get over it. I do believe there are still a number of people, unfortunately, in the workforce that don't get it. And so, depending on what your personal situation is, I think you also have to, gauge how much you say and put some thought to that as well. because there are cases where sometimes you don't even tell the person who's your immediate supervisor. Sometimes you have to go to someone else to say, I'm not sure how to handle this because I know I'm not going to get any support there, and I know that's where I need the support, but here's the issue. So I've seen a number of things over the years where even despite the best efforts in a big organization, people are confronted with a less than receptive audience when they share. So kind of think about who you're talking to as well.
Thank you. Jill, I think we're getting close to question times, yes? All right, so questions. Just wait for the microphone, please.
Just with respect to this comment about do you tell people about things at home, I wonder what your perspective was on, as one way to advance that, being the person who was seen as encouraging those questions from your own staff. So rather than create the opening for yourself by first of all listening to your own staff and then being kind of a force for good and that whole scenario changing in the office, do you have a view about that?
Well, if I may start on that answer, I do have a view, and it's one of the things I wanted to mention today, and that is, as women in leadership roles, you can be a huge mentor to people, or you can be the biggest nightmare they've ever had.
It's true.
Because there are a lot of women leaders, certainly from my generation and generations before mine, who feel like, hey, I didn't get to work from home, so you shouldn't, and they tend to, want to drag women down, and they'll, even in public forums, be kind of tough on women. And so I think that as women leaders, even if it's not an accommodation you personally needed, that you should be supportive of things like, remote work and certainly daycare for those companies that are big enough that they can accommodate. On-site daycare, I know, was a huge boon to people when it first came on the scene. Healthcare, good funding of 401ks, and another area where these nonlinear career paths, my other warning is be careful that does not translate to we'll pay you less with no benefits. I mean, think about what it is you're signing up for when you sign up. But as women, to be supportive of making sure that people are compensated fairly, treated fairly, and people that need those accommodations get the support from management.
Thank you. I've enjoyed this tremendously. I happen to work for a very large organization, over 60,000 employees. I've had 5 different jobs. I've worked there for almost 30 years. I was a manager at one point, made a decision early on in my career that I just didn't want to be a manager. And it served me well. I am well compensated. I'm recognized. I feel successful. What I'm struggling with now, and for the 10 or 12 or 15 more years that hopefully I will continue to work for the organization, what strategies can you recommend so that I remain relevant to the leaders now and in the future?
Yeah. I'm not sure what industry you're in, but I think the term relevant just needs to be synonymous with where the business is heading. So, understand where your industry and where your business is heading and what they need from people today and tomorrow, and just stay on top of that. Continue to build your skills and your capabilities around those things, and you'll definitely stay relevant.
Just to add on to this, and this is the struggle that I have right now, is in being part of management, and I work in the banking industry. So you mentioned SAP, and there are only so many leadership roles or management roles. It's a limited number. So having chosen not to be that career path, I'm really struggling. Did I make the wrong decision? And I do talk about this with my mentors and managers, to say, when do you have to move into management to continue the recognition? I'm really struggling, and I don't think I'm the only one, as I talk about it with others as well. And I really don't think we talk about the fact that you don't have to be in a management to continue to make a difference.
Yeah, I'm not familiar with the bank. It's the one industry probably I haven't worked in. So, but I can just explain how it works in our industry and in our company, and maybe you can think about talking about this openly in yours. But we have just really more or less in the past couple of years really shown, understand now, not like in the past, but understand now the importance of the people who are what we call experts, non-managerial, very seasoned professionals, individual contributors. So we've created, we call it a dual career track, but we've created a lot of awareness in the company about it's equally important to have people that have done what they do for a long time. We don't need tons of them, but we need some of them. And so we've expanded the career path for those people. When I said the top 600 executives, some of them are experts. Some of them are individual contributors. They're not all people managers. So we've allowed the pay scales to adjust on both sides of the equation so that we have, you know, a path for them to continue their career. Again, the numbers get smaller when you go up to the top, but you know, there's value in that, and we've recognized that. So maybe, and that only became a kind of acutely aware in the past couple of years. You know, it hasn't been that way a long time. And then now we're also doing more to develop them, and we're also doing more to help them see that, you know, moving around the company also has value instead of staying in the path that they're in to stay fresh.
Yeah, I would also offer that in DOD, before I left, they had established a similar career path, which there were people that had titles like strategic analyst, and they were people at the top of the pay scale, of the GS pay scale, and they were non-supervisory, which is really hard to find in government.
Yeah.
But they were creating these non-supervisory strategic analyst positions. They were mostly senior people that I'm saying, you know, with more than 20 years of service, that had very, very strong analytic skills, writing skills, could work independently, take a lot of very complex information and present it in a way to really senior people that it was, you know, well received. And that's become popular, and so there's more of those kinds of positions. So I do think there's a move in that direction. And again, as the workforce changes and people do want to do more independent work, I think you'll see more of it. But, you know, banking is a lot like government in that they're slow adopters. But once they adopt an idea, they kind of really embrace it. So there's hope.
We have time for one last question.
Yeah, thank you. I've heard the advice that when you want to negotiate for something, wage increase, a new job, et cetera, you should do it by posing it as how it's good for the company. Always pose it that way. So when you're trying to negotiate, you discussed earlier about kind of taking a step back, getting alternative hours, working from home occasionally. How would you suggest to negotiate that?
I guess that's mine, right? I don't know enough about I mean, I would need to understand the situation, but in general terms, you have to look for the win-win in it. You know, what do you want? What are you trying to accomplish for yourself? And then how does your employer or your boss benefit from the situation? And look for the things that both of you get out of it. So it could be things like you'll work longer hours, you have more flexibility to cover different time zones, starting earlier, working later. It could be that you can think better and be more creative or strategic when you're not in an office where people are interrupting you every minute of the day. You know, you could think along those lines and find some ideas that would benefit them if it's that sort of a job. You could also, and prove it with outcomes and facts and stuff. Ask to give you a chance. Ask for it to be a trial, you know, give you 30 days, 90 days, something like that to demonstrate these things and then get the increase that goes with it. Or just continuously think about how to make it comfortable for that person depending on their level of risk around stuff like this, as well as what it is you're looking for. And I think when you find the win-win and you can demonstrate and build trust around it, a lot of times things like that just simply come down to trust. You know, have you proven yourself as someone who is worthy of this opportunity? Because sometimes if it's new to an employer, it's a risk, no matter how you look at it. So if you quickly build the trust and demonstrate that you're you're someone that's going to make it work and do it well, then it shouldn't be difficult. So you might have to take the risk down a little bit for them somehow.
And what I'm hearing from both May and Pat today is that have the conversation. You know, it's so important to speak up and say, I want more money. I deserve more money. I'm making my case for more money. I need to work from home. I'd like to come up with a plan that would work for us. This is my plan. I also feel, as someone who's the recipient of some of those requests, is that, you know, we try to spin things to say how they're great for the company. I think it's very important to be authentic on how it's going to benefit you as well, and to say, I understand this is really going to benefit me in these ways, but I also see this as a really good possibility for the company too. And I think that a lot of managers are a little more receptive when it is painted that way, because you know where the person's coming from, and you're not spending your entire time trying to unspin their spin and say, well, that isn't really all that good for the company. So it's good to have that authentic conversation about where you are and what you want. But I think the other thing is and May, you brought this up, and I want to end on this point, to get those on-ramps and off-ramps in our career, we are really willing to trade down in our compensation. And I just ask you to share this with your colleagues, with your friends, your family, your constituents. Let's not do that. Let's not do that. Let's find a way to not have to always trade down salary. That means we have to bring to the table a level of expertise that's going to be valued, and we have to be valuable in order to insist on that, but we're capable of doing that, and that's within our control. So the key is to let's start trading up. And thank you. I want to thank both May and Pat for joining us. Okay. And we are just going to stay put here and move on to the next portion of our program, our afternoon keynote.
Hi again. I have the honor of introducing Chairperson Baer. So let me tell you a little bit about our next speaker. Sheila Baer served as chairman of the Federal Deposit Insurance Corporation from 2006 until 2011. She was named, I love this, Protector-in-Chief by Time Magazine for her fierce advocacy of the public interest. Sheila has received numerous honors, including the John F. Kennedy Profiles in Courage Award, being twice named by Forbes magazine as the second most powerful woman in the world, and she was named by Harvard University and the Washington Post magazine as one of 7 America's top leaders. Before joining FDIC, Sheila held several prestigious positions, such as Dean's Professor of Financial Regulatory Policy for the Eisenberg School of Management and at the University of Massachusetts Amherst, and also Senior Vice President for Government Relations of the New York Stock Exchange. Chairman Baer received a bachelor's degree from the University of Kansas and a JD from the University of Kansas Law School. She also holds honorary doctorates from Kansas University, Amherst College, and Drexel University. Sheila continues her work on financial policy issues as a senior advisor to the Pew Charitable Trusts and as the chairman of the Systematic Risk Council. She also writes a regular column for Fortune magazine and is the author of the New York Times bestseller, Bull by the Horns, Fighting to Save Main Street from Wall Street and Wall Street from Itself, which we now also will all have the opportunity to read because there's copies provided for us. So thank you very much for that. So it is my honor now to introduce to you Sheila Baer.
Thank you. It's nice to be here. It's a very nice introduction. You know, a lot of people mention this being named the second most powerful woman in the world by Forbes magazine, and which was a very nice accolade. But it's interesting. I was speaking to my daughter's grade school during the crisis. I have daughter who's now 13 years old, and at the time it was 2010. She was still in grade school. And when the principal introduced me to these young women, he mentioned this being named the second most powerful woman in the world, which is very nice. And so I got up and gave my remarks about, my usual spiel with kids about responsibly saving money, handling money, how banks work, that type of thing. Concluded my remarks, opened it up to Q&A. A little hand went up in the back of the room, and she said, "Well, who is number one?" So it was, it's very, very difficult, very, very difficult to impress kids these days. And it was, of course, Angela Merkel, who, that was 2008, 2009. 2010, I'm afraid I dropped to number 14, which was quite devastating. I was after Lady Gaga. And then in 2011, I dropped off the list completely. But I was at the top of the list of people who dropped off. So there you go, as I was leaving the FDIC. So I wanted to talk a little bit this morning. When my book came out, I had this discussion with the publicist at Simon & Schuster and the editors about how we should market the book. And of course, it was a crisis book, and that's the main thing. It was my memoirs, my perspective. But also, there was a lot of personal experiences that I had in a heavily male-dominated decision-making structure. And there had been a lot of speculation and observations, public observations about some of the disagreements I had had with some of my male colleagues. And I said, well, maybe we should emphasize that part of the book too. They said, no, we don't want to make it a woman's book. That's going to marginalize it. So then I saw the success of Lean, and I'm going, okay, well, that was a good call. But anyway, it's done pretty well, and it was important for me, I think, to get my side out. I think there was some, as I say in the book, there were some inaccuracies reported in some of the earlier crisis books about the role of the FDIC, which I wanted to set straight. So now, though, even though we decided not to market the book on that basis, I loved having this invitation to speak, because I can get with you a little bit of some of my experiences. You never know if it's gender or not. I was at the time of the crisis, I was the only woman head of an agency in a very intense period, obviously, where we had to make decisions very quickly, and there were a lot of tensions. And so, and there were disagreements, and unfortunately some of those got publicly aired, and so there was always this, was it gender, were they excluding her because she was a woman or not? You never know. You drive yourself crazy if you try, are they not talking to me, are they ignoring me because I'm a woman? It's always something. But I think you just need to deal with it as a fact of life, and overcome it as best you can. But I have some rules of the road that I developed as not just as a result of my my 5 years at the FDIC, but throughout my career pretty much, that I'd like to share with you this morning. And then maybe hopefully have some fun with it, and maybe we'll have a bit of a discussion afterwards. So my rule number one, my first rule of the road is never get emotional. Oh my gosh, never ever get emotional. And whatever you do, don't cry. Oh geez. There's nothing that's going to make you irrelevant faster. And this is actually difficult for me, because during the crisis, people may know this, I really was upset that all these people were losing their homes. It just outraged me. And yes, there were flippers. Yes, there were people out there taking advantage of the situation, but there were a lot of innocent, and I think the Philadelphia Fed and some of the other regional Fed banks did some research on this, especially in the subprime markets and these lower income neighborhoods. These really toxic loans had been push marketed on people. They were innocent bystanders. They were being unfairly treated. And it made me emotional, and I always had to make sure I didn't, because we were trying so hard to advocate for loan restructurings and other, strategies to preserve home ownership and keep people in their houses. And it was hard for me, because I did care a lot about it, but never, ever, ever get emotional, and never, ever don't cry. I think I tell an anecdote in the book about a conversation I had with Paul Gigot, who's the editorial page editor of the Wall Street Journal, who ironically had really gone after me and the FDIC during the crisis about not giving up the ghost and borrowing from Treasury. At the FDIC, there was a lot of speculation about whether we were going to have enough money, right, to take care of all these failed banks. And so we were running out of money, and so I decided we were going to go back to the banks and raise their premiums and do an assessment on them and collect more money from them. So this was controversial. We did an analysis. We thought they could absorb it. We thought it was important for the FDIC to maintain its self-funding and not turn to taxpayers and borrow from Treasury, which we had the authority to do. But ironically, so the Wall Street Journal's going after me for going out to banks and assessing them, as opposed to just giving up the ghost and borrowing from Treasury. So I asked our press guy to call Gigot, because I really wanted to kind of let him know how I felt about this, and I'm not shy, as most people know. So unfortunately, the only time he could talk with me, it was over Labor Day weekend, and I had taken a few days to go to Amherst, where we used to live, to do some biking, and the only time he could talk to me was in this middle of a bike ride I'd committed to take with my family. So I'm sitting at this old mill that had become a used bookstore, my bike shorts and sweaty, talking with Paul Gigot. Thank God he didn't know where I was, and making all these arguments. But I couldn't shut up. I was just so mad at myself afterwards. I felt so strongly, and I was so angry about this op-ed. I just kept going and going, and he'd try to interject a question. I'd bat him down and keep going and going. And fortunately, he was a mature enough and seasoned enough journalist that he took it in a good humor. And actually, I think that perhaps the moral of that story is it's good to stand up for yourself in the press context or any other context, because we had a very good working relationship after that. And at my request, whenever they were going to write about the FDIC going forward, they would at least call me first and let me talk with them and present our side, and they did do that. But I think I could have even been more effective if I'd been a little less emotional. But that's, always be coldly analytical. It's hard. We feel things, and I don't think that's something women should be embarrassed about. But in a business context, it can, with some people, make you less forceful or less respected. And so never get emotional. That's my rule of the road number one. My rule of the road number two is always support each other's right to be heard. And, this is the way women, I think, can best support each other. I had this amazing honor to be on the cover of Time magazine with Elizabeth Warren and Mary Shapiro during the crisis, or after the crisis, actually. I think it was 2009, 2010. And the reporter was interviewing me for this story, and I shared with them an experience that I had frequently had, and my guess is a lot of you have had as well, about being in a room which is primarily male-dominated, and making a point, making an argument, and it being just met with dead silence. And then 10 minutes later, some guy will say exactly the same thing. And all the guys, yeah, Joe, that's right. Boy, you got that one. So, don't let that happen. Do not let that happen. So, I think that the best thing you can do is we're not always going to agree with each other, and we shouldn't feel like we have to always agree with each other, but we should always at least support each other's right to be heard. And if Sheila makes a point and somebody else is trying to co-opt it, well, stand up and say, Sheila made a good point. It was funny, shortly after that article came out, I was in a Basel committee meeting. This is this international group of regulators that would meet to try to hammer out capital standards. And I had an ongoing battle in the Basel Committee to try to get tougher capital standards. And I found in this group too, it was very hard to be acknowledged. And but there was always one. I won't mention the European country, but there was another European country represented on the Basel Committee that had two representatives. One was a guy and one was a woman. And the woman hardly ever said anything. She always deferred to her male colleague to lead the discussion. But after that article came out, it was so funny. I was making a point. 10 minutes later, somebody said exactly the same thing, and she piped up. It was the first time I ever heard her say anything. She said, "Sheila Bair just said that." So, good for her. I got through some people with that article. So we don't always need to agree with each other. On the other hand, we don't want to make our disagreements be used, right, to undermine each other. So I think that's always an important thing to remember. We need to support each other even when we disagree, and try to guard against letting our differences be used to undermine each other. And I will share an anecdote with you where this happened. I think it's indicative of some of the games that you have to deal with, unfortunately, when you're dealing in a particularly tense decision-making environment. There was a situation called robo-signing, I'm sure you all heard, with mortgages, where it came out that a lot of the large bank servicers had been having kind of lower-level employees pretend like they had all the documents they needed to foreclose on families, when in point in fact they didn't have all the documents. And so it was bad, and it was very bad. And so we were trying to use this as a catalyst to get massive write-downs of principal on these troubled loans, because it was not, these loans restructurings are not being done. They needed to be done on a wide-scale basis, and we were still having these understaffed servicers kind of go loan by loan, completely dysfunctional, a lot of them. I'm sorry, it's a little better now. But, losing paperwork, all of that. So I wanted the Financial Stability Oversight Council, which was a group that the Dodd-Frank Act had created with all the regulators, to take an aggressive stance on this and really provide a unified front to get these servicers to start dealing effectively with these loans. And I wasn't able to get anywhere. Tim Geithner, and people generally know, Tim and I had our disagreements, was the chairman of the FSOC as Secretary of Treasury. So he wasn't doing anything. I was trying to get a meeting. Dan Torello was also trying to get a meeting. He wasn't scheduling a meeting. So I sent him an email with a proposal, and I said, as a member of FSOC, I said, here's my proposal. I'm requesting a meeting. Please schedule a meeting. I want to talk about this proposal. And it was mainly just to force it. It was a good proposal, but it was mainly to force the meeting. So I thought I was going to get some forward movement. Unbeknownst to me, Tim, literally a day after he got that email, he asked Elizabeth Warren, who was not, she was without portfolio at that point. She was advising the president on setting up the Consumer Bureau, but it hadn't been created yet. So he went to Elizabeth Warren and asked her to come up with a loan modification proposal. And not surprisingly, she also had a proposal that heavily relied on principal write-downs, but we didn't, I didn't know he was asking her to do that, engaging her, bringing into conversation, which she had not been before. And so then he comes back to me and like, okay, so now he's got dueling proposals. So he's going around and saying, oh, the women are, the women can't decide what they want to do. It was really annoying. So I asked Elizabeth to come over so we could reach convergence on a proposal, which we did. But in the meantime, the guys got together and decided that because of these squabbling women, right, that they were just going to break this work stream into two components. And so the enforcement agencies, the Justice Department and the state AGs, were going to have one work stream on servicing standards, and then the OCC, which was the primary regulator of these large banks, was going to be dealing with what they call the look back, which is how the loans that had already violated the law, the loan mods because they did the foreclosures or the attempted foreclosures because they didn't have the paperwork, what kind of relief borrowers should get. The OCC would deal with that. Of course, that just cut Elizabeth and I out completely. And then literally just a couple days later, somebody leaks to this was just the icing on the cake. Somebody leaked to the Wall Street Journal that Elizabeth Warren had given Tim a proposal for the major principal write-downs of these troubled mortgages, and all hell broke loose. Now, I don't know who leaked that story, but at the end of the day, I think there was a conscious strategic effort to try to create differences between the two of us, right, and then get us both marginalized because we were disagreeing. So people aren't always that nefarious, but it can be rough out there. And when you go to the senior levels, it's amazing what kind of games people can play. So I do think there's a tendency when people want to marginalize a woman to try to get her to disagree with another woman. So that was one experience I've had in the past, and I think it's worth noting just as a defensive measure. So you don't want to let yourself be used, and that can also be a challenge for women. And I think another strategy I have seen that I've had to combat is as I've ascended to more and more senior levels of decision making, is when another male colleague, another head of an agency, for instance, doesn't want to take me on, and I've seen this happen to other women as well, they will anoint a female subordinate to argue with you, right? Has that ever happened to you? So, and it's a clever strategy. It's very clever because, one, it takes the gender card out if there's any subtext on that. Another woman is engaging with you, but then this is a woman who's subordinate, right, in the hierarchy. So if you're playing a little power game, it can be a very effective ploy. And so, don't engage in it. If you're a colleague who is it's your level, should be dealing with you directly, make him respond to you. Some guys just don't want to do that. They don't want to give you the respect or the credence of engaging with you directly. But if they're deferring to a subordinate, I would say very politely to that subordinate who's probably just going to be being drug into this, I'd like to hear what Tim thinks or what Joe thinks. Don't engage it. And if you're a woman subordinate who people are trying to draw you into that kind of strategy, just don't do it. And I think at the end of the day that can be hard if it's your senior who's asking you to play that role, but it's not fair for them to do that. And so I think, again, that's something, unfortunately, that happens, that I've had experiences from time to time. And so, again, it's something to be aware of and try to guard against. And just don't walk into it to begin with. Another thing that I think is a very effective strategy for women, and this is going to be counterintuitive probably when I say it, but don't be in the game for credit. Don't. I'm going to clarify that because I know there's a lot of us that think we don't get credit enough, right? And that is absolutely true. That is absolutely true. And Margaret Thatcher once said, you know, if you want something said, ask a man. If you want something done, ask a woman. And there is, you know, you can't categorize. There, you know, I would say 99.9% of my male colleagues I've had tremendously successful relationships with. So the men in the room, don't get the wrong idea. I'm not bashing your class, but that 0.1% it can be problematic sometimes. So, but I do think one of our strengths is we do like to get stuff done, right? We don't play games. You know, we come to the table, we got a job to do, right? So we have an objective to meet. And with us, it's not about who's going to win or who's going to lose. You know, we want an end result. We're not in the game for credit. We want to get something done. And I think sometimes in a male-dominated environments, you can get into this kind of testosterone-laden game playing, and I don't like it, you know, and I don't think we should buy into it because that's not our strength. We get stuff done. And here's a prime example, again, during the crisis, when I was going to these Basel Committee meetings, and we're trying so hard to get the bank capital levels toughened up, and I was very frustrated because I would meet with my colleagues, the other bank regulators, including those at the Fed, which led the Basel Committee delegation, the U.S. delegation to Basel. And we would get an agreement on what our goal would be and our strategy, and then we would get into the meeting, and the Fed would never speak up. And I always felt I was too much on my own. And this was hurting effectiveness of our position because the Fed, well, the FDIC was a powerful agency, but the Fed was a lot more powerful agency and influential. And again, they were the lead of the U.S. delegation. So me speaking up wasn't nearly as effective as the Fed speaking up. And it was just me speaking up and not the Fed. Then I think the arguments are being taken less seriously. So I finally asked, I kept asking, why aren't you guys talking? And one Fed official finally told me, he said, well, we don't want to lose. And so if we get out there with a position and the position doesn't prevail, then we're going to lose. And that, the stature and status is important. And so, okay, I get that. And I think if you're Fed, you're on a pedestal, and you do have to be very protective of your brand. But at the end of the day, if you don't take a position, if you don't risk yourself a little bit, you're not, then you really are just playing for credit and advantage or winning or losing. You're not playing for the end result. And I got out there. You know what? I advocated for a 10% risk-based capital ratio. We got 7. We got 7. Didn't get 10, got 7. But if I hadn't been out there looking for 10, we probably would have gotten something more like 4 or 5. And mind you, this was a 7% capital ratio for what's called Tier 1 common, which is a very high quality level of capital. 2% had been the standard before, so we got it up to 7. I wanted an 8% leverage ratio. Didn't get anywhere close to that. So a leverage ratio, bank capital requirements, there are 2 kinds. There's one called the risk-based ratio, which is basically based on judgments about how risky assets are. And then there's a leverage ratio, which is just an overarching cap of how much common equity you have against your total assets, not risk-weighted. So prior to the crisis, the Basel Committee had relied only on risk-based capital, and that had been disastrous because there had been some very bad judgments made about what was risky and what wasn't. Like AAA, right, securities, those were zero risk. The European sovereign debt as zero risk, or very low risk. So we had some big mistakes. So anyway, I was trying very hard to get a leverage ratio because of all these problems we had with risk-based. Tremendous disagreement. I was advocating for 8. We got 3. But you know what? We got a 3% leverage ratio. We got the door open. And the U.S. now, I'm proud to say, is moving for a substantially higher ratio, and the European nations are as well. But if I hadn't been out there, we might have even had a leverage ratio. I was just in Europe last week talking with some of my former colleagues, and they were joking that they're going to erect a plaque to me in the Basel Committee for the leverage ratio. But it's getting done. But you've got to get out there. If you hang back and play it safe, you just don't get the stuff done. And I think we have a tendency to do that and be willing to do that more. And I think that is an advantage. We're not just playing the game to win. We're playing to get something done. And I think if you make the end result your top priority, if you resist the temptation to play the games and posture and all that, focus on the result, you will do well in the long run because your superiors, well, obviously, if you're the top of the chain, results is all that matters. Results, if you're with a corporation, that's all that's going to matter to your board, to your shareholders, to your other stakeholders. if you're subordinate, I think good managers know at the end of the day who does the work. And I think they appreciate people who are doing the work a lot more than they have people, who are just kind of really effective bureaucrats who can come in at the final meeting and try to get their name on something, but really didn't do the work. So don't let getting the credit be your end game. Let the result be the end game. But once you do the work and accomplish the objective, you should demand credit for your work. You absolutely should. And your female colleagues should help make sure that you get it. I do think that there is, a tendency. I tell this anecdote in my book about this debt guarantee program that the Fed and the Treasury ask us to do. And their original proposal was, it's an interesting anecdote in the book. I think one of the more interesting dynamics of the kind of information void we were dealing with. But I was asked to go to this mysterious meeting in Hank Paulson's office. And my scheduler kept asking, and I emailed Hank directly, what's this meeting about? Nobody would tell me what the meeting was about. And I get over to Hank's office, and he and Ben are sitting there in his office on the couch, and they've got Tim Geithner on the phone, on the speaker. And I sit down, and they hand me a piece of paper that basically says the FDIC is going to guarantee all liabilities of the banking system. All right, okay. And the Fed and the Treasury are going to be right behind me. So I said, wow. But they were very, legitimately they were very worried about stability and bank creditors running because there was far too much reliance on wholesale funding. Those banks who had stable insured deposit bases were not having much of a problem, but those who relied on wholesale funding, especially short-term funding, which they had to keep rolling, were having trouble. So I said, this is interesting. I'm going to take this back and talk with my board and my staff about it, which I did, and we came up with a counter-proposal, much trimmed back. We said we would guarantee rolling debt, capped at whatever their outstanding was. We didn't want the thing gamed. We're just unlimited guarantees of all liabilities. We could not credibly do that, and I didn't think that was necessary, and we were going to charge for it. And we put a good program. It was called the TLGP program, Temporary Liquidity Guarantee Program. It was very successful. We put it together very quickly. Didn't want to do it. We were asked to do it. That was fine. We did always come to the table to work as a team. But anyway, so we did this, and then Andrew Ross Sorkin's book comes out. You probably Too Big to Fail. Many of you have probably heard it or read of it. And so I'm reading, who by the way never talked to us in writing his book, never talked to us. And so I'm reading about this debt guarantee program, and basically his characterization of this debt guarantee program was that Ben and Hank and Tim put it together and handed it to me and sold it to me on the basis that I would get credit if I did it. And it was so over the top. It made me so angry. But, I guess when I started reflecting on it more, I realized, well, I guess, that's the highest form of flattery. People want to take credit for the stuff that you did, fine. That's just accept that. But I do think, and it's not always, I think a lot of times in their minds that they're not really trying, and they think they're taking credit from you. They don't. I think there are some subtle attitudes and biases, which unfortunately we still deal with, where sometimes your male colleagues may, think that they really did help, or that, the little lady couldn't do it all on her own. It's subtle, but it's there. And so in their mind, and they were the catalyst. They asked me to do this original program, so they were absolutely the catalyst for the program. We designed the program, but I think, in their mind, they thought it was okay for them to take all the credit for it. So anyway, that was clear. There was another one of the many reasons I wanted to write my book to clarify. So you absolutely make the policy result, or if you're working for a corporation, the good product or good customer service, your revenues, your profits, whatever, make that your end game, not the credit. But then once you've accomplished something, make sure you stand up for yourself. Absolutely say, I did this, you didn't do this, I did this. And I think another way that women can really help each other is to back each other on issues like that. Another rule of the road, which may be counterintuitive, I call this allying with dads. And what I mean by this is, throughout my career, some of my best allies have absolutely been older men, right? So when I started in my career, there were very few women mentors. And I think, I'm a Republican, so I'll give you some Republican names, but, Sandra Day O'Connor, I had the amazing privilege of working on her Senate confirmation when I worked for Dole on the Senate Judiciary Committee. Elizabeth Dole, of course, Nancy Kassebaum, a longtime Republican senator from Kansas. I was fortunate to have fairly senior women where my career brought me, not in close contact, but enough that, you know, I could really learn from them and emulate them. But on a day-to-day basis, Bob Dole was absolutely my mentor and my supporter. And I found over my career that older men will not be threatened by you, okay? They will look at you, and especially if they're dads of daughters, they'll want to support, you know, I think they have greater sensitivity to women and their potential and their aspirations and their right to compete on an equal footing. And so I do think that you always want to build alliances wherever you can. And I would also repeat what I said earlier, that 99.9% of all the men that I've worked out throughout my career have been absolutely great. It's that 1% sometimes that you run into that you got to deal with. But even I think when men you may be having an issue or some tension there, a lot of it is I don't think they understand or they're aware of it. And once they are made aware of it, their attitudes change. And again, I get back to that Time magazine interview where I mentioned this problem that I had experienced of saying something and then a guy saying it later and getting credit for it. And I had a couple men send me emails saying that they had never thought about it before, but they realized that they were doing that. And they actually thanked me for bringing that to your attention, because again, some of these cultural biases can be very subtle, and you just don't even know that they're there. And so I thought that was a positive thing, that they recognized that dynamic. They'd seen it in meetings before, hadn't appreciated what was going on, and wanted to change. And even during the crisis, Ben Bernanke and Hank Paulson, we had our disagreements, but I felt like they always listened. They always listened. I could impact the discussion. I could impact the decision making by engaging with them, and I felt they were always accessible. Others, I had a problem with being excluded and constantly having to fight to get into the room. And as I said earlier, could have been gender, could have been other things. The battle lines are there. You don't always know whether it's gender or not. I think most men do these days welcome women into the halls of power, and I think they do want to view us as equals and want to work collaboratively with us. And again, I think almost always, if there's a problem, open engagement can be the way. But there will still be that small percentage where you might have an issue, and I think you just need to approach that with your eyes open, be aware of some of the strategies that are used, and be willing to deal with that in an effective way. So my final rule of the road is, especially if you're in a publicly prominent role, don't let anyone photograph your neck. So, okay. Nora Ephron wrote a book. Did you Nora Ephron's book, the late, wonderful, I Feel Bad About My Neck. She is so right. If you're over 50, don't ever if you see a photographer kneeling on the floor, angling up to take your picture, run. Be afraid, be very afraid. There is absolutely nothing worse than that. I remember when we were early on in our efforts to push loan modifications, Jonah Serra at the New York Times did a great piece on our program to get loans restructured to preserve home ownership. And, it was a great story, and it had the absolute worst picture of me in my life. Oh, it was just all my neck. and I, 10% of the feedback on that article was, what a great article. 90% was, what a terrible picture. So, it can't, and unfortunately, I think women who have public positions, it is too often about your physical appearance. It shouldn't be, but it is. And that's not always true. Chris Christie is also, and he's spoken, well, but no, his weight, it's irrelevant as far as I'm concerned. He's been a very effective governor, but, he's had some unkindness there. So this is not confined to women. But I do think there is more of a focus on physical appearance. And you do, again, if you're in the public sphere, you do need to be aware of it. Here I had one anecdote with Vogue magazine, kind of a classic example of this. They had contacted me and said they were doing a Women in Power edition, and they wanted to photograph me for this Women in Power position. And they wanted a lot of time. I mean, they really wanted a lot of time. And so I agreed to do it. I gave them an evening and a half a day. So they came over the night before the photo shoot. And okay, I was flattered. Vogue magazine, how cool is that, right? So it was a bit of a sacrifice, but not too much. So they came over, hordes of people, and we tried on these clothes. And they gave this steel gray silk Armani suit. I've never in my life weren't anything that expensive, and just the hair, the makeup, they just do it all. And then so the next morning, the photographer comes over. He's a classic. He's got this silk ascot, and he's chomping on his cigar, and he's photographing me 1,000 different contorted ways. And then we go out into the balcony. It was freezing cold, and we're spending another out there, and I'm teetering on these high. I never will. This is as high of a heel as you'll ever see me in. So I'm teetering on these Bruno Maglis that they had given me. And so it was painful, but I was like a giddy school kid, and I made the mistake of telling a lot of my friends, I'm going to be in Vogue. And so sure enough, a couple weeks after the shoot, Andrew, my press guy, gets a call and says, well, we're not going to run the pictures. And he said, okay. He said, well, Michelle Obama is going to be in our Power issue, and so we need to bump Sheila for that. So, okay, we understand that. If I'm going to be bumped, at least I'm going to be bumped by Michelle Obama. So, but he assumed after putting me through all this and making all these assurances and commitments that I would be in a later issue. No, we're never going to put her in, but, we'll put it online if you want. So at that point he said, thank you very much. And then it was leaked later that they didn't think I was pretty enough to be in their magazine. Oh, yeah, I'm over it now. But, it's just... But it's really how form can overtake substance, And again, the content of what I was doing at the FGIC didn't overcome the fact that I apparently didn't look that good in my Armani suit. But O Magazine, to their credit, these pictures showed up later. They wouldn't even give me the pictures, which I found was really annoying after all of that. But O Magazine later ran a Power issue, and they used one of the pictures. So I guess O had different standards than Vogue. But there you go. So again, be very afraid when it comes to games that people might play with your physical appearance. Because I do think, I'm sorry, I just think editors in particular like to play around a little bit more with women public figures than men. So those are my rules of the road. I'm going to end with a quote before we take questions. And this is from, indulge me quoting Margaret Thatcher again. And this is actually a quote from The Iron Lady, great movie with Meryl Streep, where she's, quite elderly. She's sitting in her wheelchair, and a young woman comes up to her and says what an inspiration Margaret Thatcher had been to her. And so Margaret Thatcher, being played by Meryl Streep, says kind of nostalgically, well, back then it was about doing, and now it's about being. And I think, I look at what's going on with Washington now, and it's really, look, we've got a lot of good people in government. We've got a lot of good people in Congress, but we also have a lot of people, I swear I don't know why they want to be in government service. You just want to have the trappings of power, sit in your office and have all that but not get anything done. Why in the world do you want to do any job if you don't get things done? So again, I think that's our sweet spot. I really do. Getting things done, being results oriented, and I think the more and more women get into positions of power and places where they can make a change, whether it's financial services, politics, or whatever, the better our country is going to be. So thank you very much for letting me share these thoughts. I'll be happy to take questions.
Okay, thank you. My question is really your opinion about Dodd-Frank. You had mentioned it. I think one of the outcomes that we will see is the number of banks that will be drastically reduced because of it.
Right.
Is that a good thing? Is that what we wanted?
Yeah, no, I don't think that's, I have been concerned about we could do better targeting, I think, with some of these rules. And I think community banks and traditional banks generally, that the banks that stayed to a basic banking model, that took deposits and made loans, really didn't have a problem. I mean, the thrifts were a problem, obviously. But the traditional diversified commercial banks and community banks really weren't. Less than 5% of the community banks failed. A lot of those were bad commercial real estate loans, but then later a lot of them just got caught with the recession. And so I do wish the regulators would be a little more nuanced and targeted with the implementation. On the flip side, I think for the very largest institutions, we can be doing more. So I've seen a lot of really complicated rules coming out that may be having some incremental impact. But those complicated rules, again, if they're not well targeted, can be a barrier to entry. They can be discriminatory to the smaller institutions where the compliance is going to be a much bigger part of their budget. And again, if we're not getting a lot of impact for the very large systemic institutions, then I really think regulators need to think twice. So I would share some concerns. I don't know if that's Dodd-Frank. I think it's more implementation. But I do wish regulators would be more targeted, definitely.
Sheila, thank you. That was great. How did you stay in the game when you felt like you weren't included in those meetings? And as you were rising, did you feel differently as you went through the progress? I mean, you know.
And yeah, that's a really good question. Well, you know, maybe because I am results-oriented, I just kept coming back. I didn't let my feelings get hurt. I didn't really let myself, you know, looking back to your question, I did, you know, I got a little angry then. I got angry again when I was writing it. But I just, because I was results-oriented, I just kept coming back. And I think we did make a difference. But it is amazing as I was writing it. I thought after the past few years' passage of time that I would mellow out a little bit. And I didn't. I just got angry again, especially on the loan restructuring. That was just so mishandled. It was never effectively dealt with. We're bumbling through it, but it's really, I think it's hurt homeowners, but it's been a drag on the economy too. I was fortunate enough to have, when I left, I had all my emails and calendars and all that, and I had it in a searchable database, because you know, your memory can be tricky, and so I had a lot of contemporaneous documents to write this. But then going back and looking at them, I just got angry all over again. But you know, it is what it is. You do your best you can, and we did make a difference. I think we won more than we lost, and I think the results were different and better because of our efforts.
Thank you. I too am a Republican. During the first Obama's administration, President Obama's administration, during that campaign, Hillary Clinton was viciously attacked for how she looked, how she dressed. I was so incensed by it that as a Republican woman, I wrote her in and during the primary. I thought it was
outrageous. Yeah, no, I couldn't agree with you more.
You know, what I see, women, you know, how we hurt women in general is that we remain silent when women are attacked for their looks, how they dress, and we're silent because it may not agree with our politics.
Right.
And I think it's incumbent upon all women to call out bad behavior, whatever the politics, whatever your politics are.
Oh, I agree with you. I absolutely. Those, you know, again, we won't always agree. You know, we may not agree with Hillary Clinton on all of her policy issues, but she's an amazing woman, an accomplished woman. She deserves to be taken seriously, not trivialized by you know how she's doing her hair today. It's just outrageous. So we absolutely should stick up. We need to be taken seriously. We have a voice. We have a right to be heard, and we should absolutely and not be trivialized with those types of irrelevant analysis. You know, another thing that I think happens to women, especially women politicians, it happened to me, it happened to Brooksley Born, trying to trivialize our policy arguments as some personality thing, right? Oh, they're divas, or oh, they're just, you know, mugging for the cameras or whatever. You know, or they're difficult, not a team player. Oh, if I've heard that once, I've heard that 1,000 times. And it's not, you know, so, you know, Brooksley Born, they did the same thing to Brooksley when she was trying to she was right on derivatives, and everybody acknowledges she's right now, but when she was trying to say, we've got this huge OTC derivatives market growing, nobody's regulating it, nobody's looking at it, you know, even basic disclosure, reporting, registration we don't have. And they didn't really take her on the merits so much. There was a horrible whispering campaign about how difficult she was, you know, and all this. And they were doing the same thing to Janet Yellen before. You know, I'm sorry. And I came out strongly for her. And I don't agree with her on monetary policy. I absolutely do not. But I think she's a woman of character, accomplishment. She deserves it. She should have, you know, if she was the heir apparent until the kind of sabotage campaign started. But it was the same thing. Or here was, oh, she couldn't handle the crisis, you know. Women, we can't make decisions. You know, we're emotional. We'll start crying. So, yeah, you absolutely, whether you agree with the person or not, you absolutely need to defend other women when that kind of thing starts happening to them. Yeah.
Do you anticipate going back into politics?
No, no. You know, I had one, well, I would take an appointive job in government. I would consider going back to government if it was the right job. Politics, though, which I define as a little bit different. Hopefully our regulators are not politicized. I did run for Congress once in 1990. I lost by less than 1%. It was a painfully close race. It was a Republican race. It was a safe Republican seat in my home district in Kansas. And I had a blast. I ran a door-to-door campaign. It was retail politics at best. You know, I had a bicycle. I'd go from door to door because these are all rural communities. You couldn't walk. It would take forever if you walked going door to door. So I had a bike. And I'd be to the talk of the town the next day. You know, these little towns of 500, 1,000 people. You know, somebody coming door to door on their bike was a big deal. And I came very close. But about the other, that was the half of the campaign that I loved. The other half was spent raising money, which I absolutely detested. I mean, it is so, what we do to our elected officials, get on the phone, would you give me $1,000? I mean, it's so degrading, if nothing else. And, but it's just a reality. And for Congress, you know, these 2-year cycles, it's just relentless. I wish we could figure out a better way to do it. We haven't so far, but it was distasteful enough for me. You know, if some billionaire wanted to come and, you know, they could legally fund my campaign, maybe, but I don't think that's going to happen. That part of it, it's very distasteful to me. I have to admit.
Sheila, question for you down here. Talk a little bit about, as a female leader, how did you change the culture at the FDIC from when you walked in the door and where is it today? And did the change in culture that you created, is it sticking?
You know, I think so. I believe it is. So we had terrible morale problems when I came to the FDIC. And thank you for asking that question, because that really was one of the proudest things I did there. We had a terrible, you know, we had this self-regulating market idea that it really permeated Washington, and there hadn't been any bank failures in a couple of years, and you know, it was the golden age of banking with record banking profits year after year, quarter after quarter. And so the FDIC, like a lot of the regulatory agencies, were starting to be marginalized. Oh, well, we don't really need regulation anymore, and so they were unvalued. Along with that, the FDIC had gone through some tremendous downsizing, again with this idea that we really aren't going to need, they're like the Maytag repairman, we really don't need the FDIC that much anymore. And so the downsizing, which was brutal, you know, and I wasn't there when it occurred, but and so I'm not going to judge, but the perception at least was that the downsizing had been done in a way that was not based on merit. It was based kind of who you knew and who you sucked up to and that kind of thing. So we had, and people felt disempowered, and they didn't feel like the cutbacks had been explained to them, the reason, you know, the rationale, who was keeping their job, who was leaving, who was not. We also had this abysmal pay-for-performance system that had put into place that basically put employees into 3 buckets. And if you're a manager, you know, man, I'm sure you have a lot of managers out there, employees were in 3 buckets, and you had like a third had to be stars and get the top bonus, and a third in the middle had to get whatever the standard raise was, and the bottom third got nothing. You know, so the assumption was a third had to be stars and a third had to be flunkies, and that's just not reality. And so people hated it, the managers hated it, and so our union, we had a union, they hated it. The other thing that was really taking its toll on morale was this thing called merit exams, which our examiners derisively called them flyby exams, where basically if you had a good CAMEL score, a good supervisory rating on your previous exam, then you got a very quick, the examiners didn't go in and pull loan files, they just looked at policies and practices, interviewed a few bank employees, and off they went. So that was crazy. I mean, looking back on that now, I mean, you know, the fact that part of the problems with examinations was they were kind of a static point in time. So if your mortgage or commercial real estate loan is current now, that doesn't mean 6 months from now it's going to be. You needed to go in and look at those loan files to see what the loan to values were, the income documentation. We weren't doing that. So we did, the first thing I did was I did an employee survey to make sure we identified the problems. These are the things that came up. We got rid of merit. We changed their pay for performance. We kept pay for performance, I believe in it, but we empowered our managers to differentiate according to what was right for the people who reported to them. And then we also just had we instituted something called the Culture Change Council, and you know, I find with any large organization, and this, I think this experience is typical, your mid-level managers are absolutely the most important employee level, at the CEO level to engage in. Your top-line managers, they're very valuable too, obviously, as a team, but it's human nature. They will try to insulate you from what's going on below. And where you and your decisions really interact with your rank and file is that mid-level management. And we had terrible morale problems there. So open communication, the top people, I said, you've got to communicate more with your middle managers. I want you walk in the halls. I want you doing, call-ins. We instituted, I started doing a quarterly call-in every quarter. I had set aside an afternoon. Any employee could call me and ask me any question they wanted. Again, as I said, we had this culture change council. We started formalizing processes to get employee input on our corporate performance objectives. We revamped our corporate performance objectives to get focused on true corporate-wide objectives like depositor protection and some of the other stuff that was really extraneous we got rid of. So we did. We were near the bottom of best places to work. By the time I left, we were the #1, and they've stayed at #1, and I'm very proud of that. It has stuck. And it's easier to build morale when people are busy. I think your organizational challenges can be when people don't have enough work to do. Then sometimes that's when the games start and all that. So keeping people focused on mission and busy, but not just busy in a good way, meaning that they're not overworked, but they're busy. They understand the value of what they're doing. They understand what they're doing, how that connects to overall mission. That is absolutely the key to good employee performance and morale, and I think those changes are permanent. I hope they are, at least. But thanks for asking.
Any other questions?
I was curious with basically the FDIC through the crisis and the luxury of hindsight, is there anything you would have done differently or approached differently?
Right. So in terms of me personally during the crisis, or government generally? Yeah. So yes, I think when I'm asked that question, the one thing that I regret the most was how we handled the IndyMac failure. That was my first major failure. That we'd closed several smaller banks, but it was a difficult failure for a couple reasons. This is a large West Coast thrift that had made terrible mortgages and funded itself with brokered deposits, which have, so you don't have a core deposit base. You don't have customers who have a relationship with you as a bank. You're basically going to a broker and getting deposits to fund your mortgages. So it was really a very sick thrift. We knew it was going to fail. We had it on a protect your failure list, but a United States senator whose name I will not mention, for whatever reason, wrote a very public letter to John Rich, who was then the head of the Office of Thrift Supervision, this IndyMac's supervisor, and basically said he thought IndyMac was insolvent, and what was John Rich going to do about it? And he gave this letter to the press, and so we immediately had they had a lot of uninsured deposits too, so we had this huge deposit run. It was an accelerated closing, so it got ahead of us. And we discussed when to close it, and actually the OTS, the primary supervisor of these banks, is the one that decides. We have some backup authority, but generally we try to defer to the primary regulator in terms of timing of the closing. And so OTS, because of congressional notifications on the West Coast, if we waited, our normal process, my preferred process, was to always wait until the bank's regular office hours were done. The bank would close during the normal hours to close it. But OTS wanted an earlier closing because of the need to notify members of Congress, and if it was 6 o'clock on the West Coast, it was going to be 9 o'clock in Washington, and so that was going to be too late to call. And I pushed on that, and I think our staff wanted to accommodate OTS, and so, and like I said, we always try to get along. So I acquiesced on that, and it was absolutely the wrong, because I think we ended up closing at about 3 o'clock, so there was 3 hours on a Friday afternoon when people come into the bank a lot. And there was this horrible woman, the door was locked. There was a woman who came, was banging on the door, clearly in a panic. CNN filmed it. There was a loop on it all weekend. It was just awful. And so, yes, that was a mistake, believe me. We never repeated it. An edict went out from the chairman after that. We are never closing a bank earlier than the normal office hours, and we didn't after that. But that is, I do regret that. But I think, we learned our lesson very quickly, and I'm very proud at how smooth those failures went. And we did, as I talk about in my book, 60 Minutes it was high risk, but we let 60 Minutes actually go on a bank closing with us so they could see the process. And it was seamlessly executed. And people, we closed it on a Friday, reopened Saturday morning, which was the usual method. Because one of our corporate performance objectives was nobody could be denied access to their insured deposits for more than one business day. So we really focused on seamless access to deposits. And we never missed that. I'm very proud of that. But so anyway, 60 Minutes came in. Saturday morning, a gentleman and his wife came with a big suitcase, and they wanted to take all their money out of the bank. And so a member of our closing team talked them down and assured them this was just like any other bank acquisition. The only thing, the bank's name was changing, everything else was the same, their account was the same. And so they left with their suitcase empty, and so 60 Minutes ran this thing, and it had such an empowering effect on depositor confidence. It really, I think, was one of the better things we did to get, we were all about public confidence and brand. If people didn't trust the FDIC brand, we were really going to be in the soup. So we recouped quickly from that mistake, but it was one I do regret very much.
Last question.
We'll two more. We had a tie. You raised your hands at the same time. We'll start with Mary.
A quick question on leadership in banking and women in banking and women leaders around the financial institutional scene. Can you comment on that in the future?
Well, we need more. Women in financial services have really kind of lost count since the crisis. You look, we don't have as many senior women in top ranks, the larger institutions in particular, than we did. And I think, I got to be honest, I think some of this gets back to the club. It really does, because when a bank gets under stress and gets under trouble, when the leadership of the bank or any institution starts being challenged, there is a tendency to circle the wagons, and the women frequently will not be in that little trusted inner circle. And I think you can see this with Sally Krawcheck, with Cherry Dial. There are a lot of women who had very senior positions who were and were performing well, who weren't in that inner circle and lost their jobs. So I think that's hard, and I regret it. But hopefully we'll recoup that over time. And of course we'll have the first female head of the Federal Reserve, which I'm just over the moon about. I think she's going to be great. And so we are still setting some milestones, but there's a lot of work to do. And with banks, I think there's been lost ground that we need to make up.
And which leaders do you admire in banking today?
Women leaders, or just
No.
leaders generally?
Any kind.
I hate to mention names because then I always get myself in trouble. I will say that I do think one of the many reasons I wrote my book is because I do think people need to differentiate, and not all banks were evil, not all bank managers were evil. And I do think the traditional banks, again, they weren't perfect, and the thrifts were a complete set of their own. But the banks that stuck to their knitting, kept to their knitting, I think performed pretty well and were prudently managed. And you look at loan balances of the regional banks and the community banks, who maintain loan balances and who are increasing their loan balances now, it's those traditional banks. It's not the big ones. It's not the big ones. So I think, the fact that they were brave enough to keep lending and not pull the credit lines and not back off the way some of the larger institutions did that were more highly leveraged and had more bad assets on their balance sheet, I think they don't give the credit that they deserve. So again, I do think it's important. And again, one of the problems with the bailouts is made people angry, justifiably so, but all banks were tainted with it. And that's just not fair, because there are a lot of good banks out there and they're still providing good service to their customers. Thank you.
So we have a copy of Sheila's book out there. If you didn't pick it up, please pick it up. But I also have to share another book that I love of Sheila's. Isabel's Car Wash by Sheila Bair. And I have to tell you, this is something that we read at home. You've heard already, I have an 8-year-old daughter. This is such a great money lesson. And I think one of the things I'd like to see from this conference is how we pay it forward in our community and how we pay it forward in our world. So it's never too early to get the lesson out. So quickly, if you don't mind, how did your daughter react to this story? I assume she was your motivation?
Yeah, so, well, actually, she didn't have to go raise money from shareholders. She had parents who generously fronted her business. She actually opened up a lemonade stand, and she's such a stinker. This is when we were living in Amherst. We lived across the street from the Emily Dickinson homestead, which was, in the summer was quite a tourist attraction. So she'd see those tour buses coming up, and she'd open up her lemonade stand on the other side of the street, and she was as big of an attraction as the Emily Dickinson homestead. I mean, she'd have hordes of people coming over and having their picture taken with her and everything. I can't tell you all the money she made. So, yeah, it got her in the entrepreneurial spirit, and I was very proud of how she did.
Sheila, thank you so much.
Thank you.
All right, I think you folks, I heard some stomachs growling, right? Are we ready for some lunch? It is served right out in the atrium.